Hello, this is Cryptolyze. I hope you are doing well this Friday, 25 August 2023. It is with pleasure that I meet today to talk about EGLD, the crypto of Multiverse X. So as usual, we are separated in two parts. A fundamental part, we will come back to what EGLD is, what Multiverse X is, its news, and then we will attack the technical part to project ourselves in the short, medium, long term on purchase prices, sale prices, and precisely understand the drop we are currently experiencing. You will see that it is relatively simple technically. What is Multiverse X? Many still call it Elrond because that's the old name and this is the old site, but they bounced back as Multiverse X. We'll talk about that a little bit later, but basically what it is. It's a tier 1 blockchain, so it's an infrastructure blockchain. Clearly, its goal and its business model is to provide developers with development kits and functional blocks so that they can build decentralized applications. From these decentralized applications, there will be users, and these users will pay transaction fees. It's the same principle that we find ourselves on, for example, an OVH or a Google or an Amazon, therefore on their cloud computing part, where we generally buy computing power. It's exactly the same principle, except that this computing power will be paid systematically when the user makes a transaction. It's called transaction fees, in which there is a part that goes to the validator and a part that is operated directly by the blockchain in itself to be able to ensure its development. This is the business model that is around almost all tier 1 blockchains. You have to understand that because it implies that to be profitable, you have to have decentralized applications. To have decentralized applications, you have to have a stacks development functional blocks sufficiently developed to be able to have significant development experience and don't force developers to learn a new language. It is also a little bit the strength of all the one layers which are EVM compatible and which precisely allow this strength and therefore to work either in Solidity and to propose, for example, why not an SDK in JavaScript, in Python, in programming accommodations, simple representative of the Web 2. So next to Multiverse X, it's a blockchain which is relatively decentralized. For a new blockchain with 3,200 nodes, it's still relatively little when we necessarily compare to Ethereum or when we compare to Bitcoin. So on this, we take a step back. We remember that it is a blockchain which is very, very recent. The strength of Multiverse X is also the possibility of having a lot of transactions. They have a sharding system, that is to say, the decomposition of the blockchain. They create several small blockchains. It's the same which are grouped in a single and unique blockchain. It's a bit like the same principle of a rope, in which we have each time small pieces of wire, which are surrounded by each other to make a bigger piece of wire, which is itself even surrounded by other bits of wire, and so on. It's really this principle, sharding, and which allows it to reach up to 100 transactions per second, which is relatively important. Clearly, we are very, very far in use, and we have transaction costs that are really very, very low. We are talking about $25 in transaction costs. So they did a rebranding which is quite strong. They talk about Multiverse X. They go from Elrond here with a site which is much more corporate, which is much more financial and let's say business, to a site which is much more mainstream. So it's classic reuse and which will mainly target users. Don't forget the business model. The business model there is to raise funds. There it is to make people use it. There we needed money to build. There now we need users to generate income. This is really the concept of marketing transformation. So we shouldn't get stuck on the fact that, yes, it's not necessarily an extraordinary name, on that there have always been a lot of comments from people who have felt betrayed by this rebranding, whereas there's not necessarily a big reason for that. They are now targeting the mainstream, so they have built a product called Multiverse X, in which X represents all of the products. We will find X Fabric, which will be the blockchain modules that allow us to build blockchains around that, and applications around the blockchain. We're going to see X World, which is going to be the main portal. We're going to see X Portal, which is going to be the main entrance to get into all the applications. We're going to have X Wallet. We're going to have X Money, whether it's crypto, whether it's fiat. We're going to have X Exchange, which is the exchange integrated into EGLD. And we have an application that's pretty clean. If you've already used it, I invite you to do so. We have an avatar system that is rather well done. We have a whole system of management, stacking, money transfer, discussion between people, which is really very well done. The main goal is to have a name and to have a set of products. Historically, we had products that always had different names and we didn't know what belonged to what. Whereas here we really have the same range with a set of products that are structured underneath, in which here is the ecosystem. You have to understand the ecosystem that we have around. So it dates from April, so it's a little bit old, but it continues to grow. We have a very large ecosystem. We have a lot of decentralized applications which are being built, which are being built, which are being built, and which will, in any case, be built on Multiverse because they also have an onboarding approach. It is one of the rare blockchains to have a real onboarding approach. In the sense through their app and new branding, it actually facilitates access to the blockchain. He no longer asks himself the question of, hey, I have to have a MetaMask. No, everything is refocused in one place. Here, if I have to go to an application, everything will be centralized in one place through the portal, precisely Multiverse X, to have access to all the applications on it. And it's something that's relatively strong because it once again allows you to get on board. And what does onboarding bring? The moment you are a developer, you have built an application. To be able to live from this application, you will have to be users. You will go to the place where there are the most users or the place that drains the most users. You are not going to go where there is no one. So on top of that, the interest is really to call through that. Well, one, the users, yes, but also the developers, so that both realize it's the same principle to actually create this type of interface where you need applications, you need users to have applications, and you need to have applications to have users. So here we arrive in a system that is not bad, and which for me will work rather well thereafter. So it's a project to follow. Technically, it's solid. The team behind it is also quite solid. And we always have the big investors who are present, and we always have projects that are being built. So for me, we are in something that is slowly, tenderly preparing for the next bull run, and it shows in the way they do things and in the way they communicate. We will finish the fundamental part. We will attack the technical part. So technical part where we see very, very well the acceleration phases of the previous bull run with the first acceleration retracement, second acceleration with the setting up of a distribution with an effective overbearing box with the break of the jump. We see that we are working here on the order block. We will come back to it. But what is interesting to see is that we had a very big acceleration in a few weeks at the end of 2021, with in particular the launch of the DEX Maillard, in which there were a lot of incentives that were distributed, so a lot of upside pressure on the GLD, and then inevitably we did so much acceleration, there was massive profit taking, and a bearish breakout, also linked to a change in the guidelines on the distribution of the GLD, incentive at the level of Maillard, okay? So on that, there are a lot of people who had bought OGL'd here who, when they saw that on Maillard, they weren't going to earn as much yield. They capitulated, they sold. And so we had this huge candle, which was really very strong at the end of November 2021, and which also worked, which was in the process of reversing. So we do have a break that happened in two stages, 1, 2, 3, okay? So first bearish wave, second bearish wave with a pullback wave in between. So something which is rather classic. Technically at the bottom, we are in a form of long-term weekend accumulation, and which is also in a rather particular form. It is one of the forms which are relatively uncommon, in which we have a descending wedge that is in the process of being made with an accumulation with the selling climax automatically secondarity phase B. And here we are building the spring. Why are we building spring? Because here we had a break-off structure at the level of the STB, okay? So we had the liquidity intake, bullish reaction, relatively strong. With a break-off structure, we broke the previous high. We didn't do a major break-off structure, okay? We didn't go to break the one at $70, and so there we have a first sign of bullish intention, but which was still relatively weak. As a reminder, at the start of 2023, we still had 6 months of mini bull run with a very strong acceleration in CR on all altcoins and BTC included, okay? Which has not been the case here at the GLD level because we have a very strong downward pressure, and we can see it very, very well here with this grinding since February 2023 until here, June globally. The announcement here by Gary Gensler and the pressure that is being exerted on cryptos with the notion of securities or not. And we see that we retraced a part above. We started to rework the upper part, which was rather a good sign. And we see that we have a capitulation, a second very strong capitulation, which is in the process to be done and which is accelerating. So I strongly believe that we are in the process of retracement of the classic order block. And there is a way to go lower to $20 or even lower. I will explain why. $20, we would be at the bottom of the order block. But the concern is that if we were really in an order block work at that time, we would have already had an initial reaction. We would have had something that would have been more aggressive, a bit like this, but which would have been also characterized on the previous candle. That is to say that we would have had oscillation with potentially a loss of volatility, which is a sign precisely of an accumulation. Here, currently, this is not the case. We have something that is relatively cheap. We're not going to hide it. We have a form of calculation that is being done with, in particular, the rupture here of the previous batch. And I strongly believe that there is a risk of have a bearish acceleration still okay to potentially get the $20 even here, which is the lowest target for me, a retest here before the acceleration, which is the order block structured around $10 at the level of GLD with an effective rework. So we would really be at the bottom of the bottom of the bottom of the spot zone. So we have to take into consideration that it will take time. We see that we are working in this zone there, and we could indeed take the time to sink gently with phases, of course, of acceleration. We could have something that is done like that to be able to go and find a level in which we would have the implementation of an accumulation. What I'm clearly going to expect is to have something strong, a strong sign, for example. It's going to be a break here, presto, and having something in which I have a form of reversal that falls into place. There I will have a bullish structure. I will say to myself, okay, it is potentially worth going back to accompany the bullish movement, being careful whether or not we manage to break a previous high. If this is not the case at this time, I will cut. If ever this is the case at this time, potentially I will take profits on the breakout. I will wait for a retracement to strengthen my position and accompany the movement. Breakout that must be done in 2 stages, breakout that must be made here at the level of the trend line, and which must first get $50 here for me. We have to get the $50 to really break the high and therefore reverse a long-term trend. There we will have a signal to tell ourselves that potentially we are either in range or we are in a bullish structure to accompany the price upwards. So here we don't have these signs at all, and in any case we should already have the first signs in the sense that we should form a retracement here to fall and then go and break this retracement and make a lot lower than the previous. Okay? If we don't have that, that means that we don't have a market downturn, and therefore that means either we are in a DCA and long-term investment policy, and therefore we list our buying price average, its average purchase price, or we wait for the triggers to be able to invest. Technically, what can we expect in terms of selling prices? Already, first thing, it's sure and certain, we're going to have a lot of sell-off in this area, okay? In the 150 minus 200 zone, we will have a lot of famous people. So a lot of people who will go all the way down. For several reasons, there are a lot of people who are stuck here and haven't surrendered. Although we are seeing a capitulation here. Through the lethargy of the market, inevitably, we have when we believe that overall, how much have we made? We are here. We are going to go back there. You will understand why we also have a capitulation. It is that we have this lethargy, which has been present for some time. And we have had a fall of less 55% in 180 days, okay? 180 days, we spent 180 days bearish on GLD while the whole market was holding itself more or less correctly. So it's very hard to hold, and especially since there we have a bearish acceleration and we have a reversal of the BTC market. So it's logical that behind we have calculation phases at the GLD level and so on. This is where you will have to decide whether or not you will continue to do DCA. Have you smoothed your buying price average? Tell me in the comments what your policy will be regarding this if we are still potentially 3 months down the road. What other target do we have? So that's a first target. Second target would be to retest the 88th. So retesting the 88th is implied in a bull run at the end of a bull run to potentially prepare for a wave 3, very impulsive wave 3. So we would be wave 1, wave 2 idiotic, wave 3 classic objective. When we report the 1 on the retracement of the 2, it is the 1,618 with an EGLD in the vicinity of $900 on an end of bull run. So that is to say, end 2025, to give you really perspective. So there, we would be in this typology, so it's really long term. Again, you have to prepare and also prepare for turbulence. We are not going to go straight up like that. We are going to have effective cycles like that with bullish accelerations, retracements, reaccelerations. We will have to wait, as usual, I want to tell you, for investment. I hope you liked this video. If you did, don't forget to leave me a little like and a little comment. It always makes me very happy. And if you ever missed the video on STX, Stacks Crypto, which is a layer 2 on Bitcoin that allows you to make smart contracts, something a little bit special, a project that is really interesting, in which you can earn BTC directly by having STX. It's here, and we'll meet tomorrow for a new video.